What's going on, guys? Welcome back into the show. Today's guest is a true treat. One of those conversations that you wish you could have hours and hours of time just sitting around a fire, sipping on a glass of bourbon, listening to this guy's journey and story because it's absolutely epic. There's so much wisdom and insight, and he is a true veteran of the real estate development game. You've probably never heard of him, though. His name is Ray Garfield, founder of Garfield Public Private, which ultimately is a company that does public-private partnerships and builds convention centers, hotels, arenas. I mean, you name it, Ray has developed it all across the country. He started flying jets for the Navy, then came out and started working for Ross Perot. You're going to hear about how this epic journey of stepping from one opportunity to the next, almost kind of like the Midas touch. Everything he did seemed to turn to gold. And you're going to hear about how he was able to accomplish this and really revolutionize public-private partnerships over the last 3, 4, 5 decades. Ray's career reads like a masterclass in leadership, in resilience, in reinvention. And in our conversation, you're going to hear about how Ray's Navy and Wall Street background shaped his unique approach to development, the evolution of how Garfield Public Private came about. He's got some amazing stories that I think you're really going to enjoy, and how he pioneered new models in civic infrastructure across the entire country. We also talked about the power of reputation, adaptability, mastering the public-private deal-making sector, from politics to relationships, negotiation, you name it. And we also talked about some of the creative financing solutions, from tax-exempt bonds to municipal partnerships, many of his lessons that he learned from building everything from convention centers and hotels to performing arts venues and energy projects. This episode is rich with timeless wisdom from a guy like Ray. And these are some of my favorite guests to interview. Super humble, super generous with his time. And this is somebody that has really executed on the highest level, thinking about how to play the long game successfully. So whether you're in real estate, you're in public projects, or you're just curious about navigating complex deals with integrity, Ray is the guy you want to learn from. Let's dive into today's episode. Welcome into the show, Ray Garfield. How we doing?
We're doing well. Very nice to meet you and be on this program.
Well, I was telling you before we hit the record button, I always get excited when I get to, have a conversation with anybody that's successful in real estate, one, but even more so with someone who's had, the expansive, depth and breadth of your career across, so many big projects in the development space. But before we lead up to kind of where you're at today and what you're doing right now, I'd love for you to just kind of take us back to the beginning of your journey. How the heck did you find yourself at the doorstep of real estate?
Well, I exited the Navy. I flew for the Navy for a while, and when I was getting out of the Navy, um, actually, I got recruited by Ross Perot and worked for him a couple of years. But my family had been in real estate for a couple of generations, and, um, and I traveled too much with Perot, and I had a wife and some little kids. I wanted to settle down. And believe it or not, real estate was described as local in nature in those days.
Yeah.
So I figured I could get off the plains and raise a family and make a living at the same time. So I started a real estate company, and a few years we had an opportunity to sell the firm to Merrill Lynch, which we did, and that led me uh, to a bigger platform. It led me to moving to New York with the family, um, and and my next step from there was really being recruited by Solomon Brothers, which was the king of Wall Street back in the '80s. And
Mhm.
so I got to work with a fellow named Lou Ranieri, who invented commercial mortgage securities, and uh, and worked on the first commercial mortgage security that was done in the country.
Wow.
It's about a $980 million mortgage on 3 New York office towers that we did. And that created an entirely different industry. That's where I really kind of got my immersion in capital finance projects. Um, and that led me ultimately to a publicly traded development firm. Um, and that I literally took out of bankruptcy. I was recruited to be the turnaround chairman, and we were able to literally restructure that company within a 4-year period and sell it to the nation's largest home builder and make our shareholders a lot of money. And that one experience introduced me to an individual who I really think is the best mentor I've had in the industry, who was the chairman and CEO of Turner Construction Company. It's the largest general contractor in the country. And Bud was on my board of directors, Bud Gravett, and um, and shortly after we completed the sale of our development company, he asked me to do some work, important work for Turner, which I was able to do, and then that led to the creation of Garfield Public Private, because um, built more buildings for developers across the country and across the globe than anybody. But the public development business was a different business entirely. Private developers weren't in that business.
Right.
Because you didn't own property. The city owned the property. The airport did. The college did. So Turner at that time wanted to compete effectively to do a design build, and I was sort of the lever that transitioned them into doing a lot of that business, and then we built the company from that point on over the last 28 years.
Wow. So you were kind of his bridge into the public world, and you guys partnered on making that transition?
Yeah, and I don't want to say that I was his bridge into the public world, because every contractor bid on public jobs, schools, courthouses, city halls, convention centers, what have you. But 30 years ago, only way you could win a public job was being the low bid contractor,
Mm.
right? They put
Mhm.
out a solicitation to architects. They select an architect and they ask the architect to design the building, all the way from concepts through schematics, through DDs, through CDs. And then they give the CDs, they do a solicitation to contractors, and those contractors get these plans that they've never seen before. And in 60 or 90 days, they've got to come back with a price and a schedule. And they know they got to be the low bidder to be awarded it, protecting the taxpayers. And over time, I was informed when I started this quest to create this new approach. That business was known as design, bid, build, litigate, and occupy, because any contractor that wins the job's been the low bidder. He hasn't been there to design the plans with the architect and to vet them. The change orders, the mistakes, the delays, all those things come into play. So you're never on time, you're never on budget, and you've got warranty issues day one. And so Turner wanted to be a design builder, engage with the architect from the earliest plans. And by the time they priced it for a city or a county or an airport authority or a university, they could give them a schedule and a budget that they could count on. And so that it's more responsibility. It is more revenue, more higher margins, but so much more predictability and so much less risk.
Mm.
And that's what they wanted to create. So that's how we we began to do it. So in my experience on Wall Street, to work with the financial advisors and bond counsels that represented the public agencies that we worked for, and coming up with very creative, innovative, and effective capital structures to allow bonds to be sold, architects to get paid, contractors to get paid, buildings to get built, and in a predictably successful way.
Wow, that's amazing. Now, you mentioned so many key kind of milestones in your career that for, most people will take one of those and call it a successful career. You found a way to string so many successful opportunities together. I'm curious from your perspective, what do you feel enabled you to get your foot in the door, to get in those rooms, to get those opportunities? And obviously, I'm curious on, you know, how you continued to, execute at such a high level and why you didn't stay in one spot and you continued to climb. So from your perspective, looking back on that journey, how the heck did you get in those rooms, capitalize on those opportunities, and what kept driving you to want to keep pushing for bigger and better?
You know, I think that you've got to do the best with the tools that you're given. I sharpened those tools at the Naval Academy, um, and a very competitive and high performance environment. And going into naval aviation, flying planes, and all of that kind of stuff, and they give you, you know, there's one mandatory course at the Naval Academy that every midshipman had to take, which was, believe it or not, public speaking. Because any officer in any part of the world, wherever they're stationed, is going to be asked by the community he's in to go out and make a presentation on the military, what you're doing, et cetera. So I guess, at my ease at, it interacting with individuals in any situation, I guess, was sort of honed at that point. You know, uh, Coming out of the Navy, I really thought I'd probably go to work for a big aerospace company. And I got recruited on an airplane by an executive vice president of Ross Perot's new company, Electronic Data Systems, and because he's a Naval Academy graduate, and I was in my uniform, and they decided, well, they pick on me a little bit.
Hmm.
And so, working with Perot and the role he gave me, which was basically um, recruiting the talent from IBM and all the other major, engineering firms, was very helpful as well. And I had a chance to literally write the book on recruiting for EDS in the early days. Eagles don't flock; you got to find them one at a time.
Mm.
And so that's helped me to identify successful people quickly, and sometimes to recruit them, sometimes to motivate them. Um, as I mentioned, I had family that had been in real estate. I wanted to raise my family successfully, and I've been married now for 58 years so
Hey,
to the same wonderful lady.
that's a
And
win in today's standards.
well, it might not have been if I'd stayed on the road. So,
Yeah, right. You're right. You
so
made a lifestyle decision that was family top of the totem pole, and obviously, the other priorities kind of fell below that, which was a good call.
which was a good call. And so starting at the bottom in just normal real estate, like you understand, real estate brokerage, land brokerage, back in the early days here in Dallas, was a great way to just learn how to list properties, how to market properties, how to close properties, how to assess good investments. That led a recruiter looking for a organization for Merrill Lynch. There was a moment in time where Merrill Lynch was kind of all things to all people. They wanted to get into every industry, so they got into real estate, and I got an opportunity to run their commercial real estate operation. Um, and doing those 4 years, I realized that it really was a securities firm and not necessarily a real estate firm. And I just thought I was going to be capped out at a certain level and in terms of growth there. So I took an opportunity to join a really major competitor. I mean, in the 1980s, Solomon Brothers was truly the king of Wall Street, um, and and was just leading the way in all sorts of financial engineering. So um, again, I I took one situation where I realized the limitations in Merrill for what I was doing and moved into a different position and really gained so much knowledge about underwriting and about securitization. You had to have a securities license and all of the things you have to do there, and finance billions of dollars and different real estate types, malls, regional malls, high-rise office buildings, big apartment development firms, multiple properties across multiple states. It was really kind of a doctorate in that segment. At a certain time, I had the opportunity to look at in the late 1980s, there was a multi-billion-dollar bankruptcy with a company called Lomas and Nettleton, or Lomas Financial, which then was the largest mortgage company in the world, 75 years old. And they took their eyes off the ball and got into the land development business. And it bankrupted the entire organization. So they're in a Chapter 11 reorganization in 1989 and 1990 and 91. Coming out at the end of 91, early 92, I was called by the same recruiter that had found me for Merrill Lynch, who is now looking for this turnaround CEO. And it got me back to Dallas. I was out in San Francisco at the time and
Okay.
got to come back to Dallas and take over the reins of this company that was emerging from a Chapter 11. But we had $1.5 billion worth of built-in losses on the books of this land development company. It had 10,000 acres of land across the United States, urban properties, industrial parks, land, though, no buildings on them, no revenues coming in, ad valorem taxes to pay. But with $1.5 billion in losses that, if monetized, would be extraordinarily attractive to a very profitable real estate firm somewhere. So the idea was to shepherd this company for a couple of years. You probably remember that in 92, 91, 92, after the recession, the adage to follow was stay alive until 95. So we took the reins in 92. We sold the company in 1996. After the economy really improved, we preserved our most important assets, particularly the losses, found a great white knight in the largest home builder in the country, who was not only, they were very profitable, but they were paying a lot in taxes.
Mm,
So
there's a good match.
the sell was, buy our company. You'll have land that you can develop in the future, but you can also immediately start dipping into the 1.5 billion
Right.
in losses to cover your profits on the home sales. So that was a great success.
Wow.
And frankly, in 1996, as I was closing that deal, I thought, man, I've done a pretty good job here. I'm going to be attractive to another firm. But as rising economies are, every CEO in the country looked like they were great, whether they were great or not.
Right. Yep.
So I kept getting offers to be a number 2 guy after being a number 1 guy. And I just decided I'd just start my own company instead of taking a number 2 somewhere else. So I did. January 1st, 97 was the beginning date for this company. And nicely, my dialogue with Turner commenced at the very end of 96, and they engaged my new firm in 97. It turned out to be a 4-year engagement to number 1, to help them extricate themselves from a very unsuccessful foray into the development business. Here's the largest contractor in the country building skyscrapers that owns a Woody walk-up in Mobile, Alabama, and owns a shut-down air base in Ohio. That just, again, like Lomas, they took their eyes off the ball. So they're struggling with their stock on the American exchange. And the new CEO there, my friend and mentor, Bud Gravett, said, one of the things I'm going to do to turn my company, Turner, around is I'm going to get rid of a company called Turner Development Corporation. So my first assignment was to market that company and sell it and get it out from under the Turner umbrella, which we did in 1997. And then in 1998, he proposed that, again, arm's length, because Turner couldn't allow itself to get back into the development business. So he didn't want to own me, of course. And so they retained our firm. And we basically began to innovate this public-private model that we've got. And it has been very successful. We, in the first 4 years with Turner, we developed about $600 million worth of new properties around the country. And it's great when your name is as unrecognizable as Garfield, but as recognizable as Turner. Just being on their team, everyone that looks at your resume and everything else, well, we haven't heard of this guy, but Turner's big, and if they're dealing with him, he must be okay, right? Yeah. So that was sort of the leapfrog into that. Fortunately, we've done well enough in the earlier days. I was very open to making a contribution to public agencies, to being able to say, as opposed, to be something different than the legendary developers across the country who are known for using their money and other people's money, building and owning it, depreciating and letting appreciation, move forward. That I didn't have to do that. I thought that I could build a viable organization, or like a law firm, because we are a developer, but we're really a development manager. We're really an owner's rep.
Yep.
We're an orchestra leader. So we bring on the architects and the contractors and the subcontractors and the work with the investment bankers and underwriters and financial advisors and bond counsel to oversee an entire effort.
Right.
To design whatever it is that a city, a county, a university, a K through 12 school district, the healthcare campus, an airport, anything in this great public realm. And so almost all of our developments are financed with tax-exempt bonds. So we're the only country in the world that has a municipal bond market, a tax-exempt bond market. And by definition, tax-exempt bonds are less expensive than conventional bonds.
Yeah.
Right?
Yeah.
So when we can structure a delivery that our public clients can depend upon and still use the taxes and bonds they'd use if they had to use their old traditional method. Public referendums got to pass in order to issue general obligation bonds. We want to build a courthouse. We got to ask the people that go to the voting booth and vote yes or no. Can we sell bonds of 100 million or 500 million or whatever it is to build a new courthouse? And if they do that, they still have these rigid solicitation and selection rules, which almost dictate that they have to go with some low bidders, where there's a lot of politics. Gosh, are there politics, right? Who, is your father-in-law on the city council or the board of trustees for the
That'll make a
university?
difference.
That makes, and I run into it. You can imagine
Oh, yeah.
all the competitions that we do. We've got to be very conscientious about evaluating the landscape as when we go in and respond to a solicitation. So I guess it's a long answer to your question of, well, how did each of these things evolve? They evolved sort of just naturally as my career progressed. Other doors opened, certain doors closed, other doors opened, and I made some lucky and maybe smart decisions along the way.
That's beautiful. Now, looking back on that journey, for other people that are looking to follow, maybe not in a complete similar path, but want to go down the development path or want to go down the investor path, or maybe they just want to be successful. What would you say are some of the foundational belief systems and disciplines in your world that as I've done these consistently over the last, few decades of my career, these are staples that anybody can adopt and duplicate in their own world that can open up doors in whatever path they decide to go down?
Well, look, um, you've got to have pristine reputation.
Mm,
So how you deal with your clients, how you deal with these people that hopefully become your friends, not just your clients, but your friends. We've developed a reputation from our earliest days of, of letting people know at the very beginning what the hard truth is. We go into a community that says, oh, well, let me digress for just a moment. We're really well known for developing convention centers and their headquarters hotels that are built together or adjacent to each other. We're really well known for doing performing arts centers, event centers, expo centers, museums. And to be able to, a typical city that wants their group business, wants a convention center, wants to be able to bring in associations, conventions, have an asset for their taxpayers, for their citizens to be able to have weddings and graduation celebrations and everything else in a top quality facility. That's a huge, important civic asset. But you can imagine that they may think, well, okay, we've got to have this convention center, so let's see if we can sell a bond. And then when they realized that it won't perform optimally unless there's a hotel next to it, a full service hotel that blocks rooms so that their CVB, the Convention and Visitors Bureau, can recruit these associations with 500, 1,000, 2,000, 3,000 people. And so they have to know that this development has got to be a public-private partnership. Why is that? Because you can build a Marriott Courtyard or a Hilton Garden Inn or a Hyatt Place for a couple $100,000 a room, $250,000 a room. You build a Hyatt Regency or a full-service Hilton or a full-service Marriott for $500,000 or $600,000 a room. In the same community where there are all these limited and select service hotels around, there's a certain capacity for economic performance, how much a person will pay for a hotel room.
mm-hmm.
And so when We have to build a hotel that's going to have its own ballroom, pre-function areas, boardrooms, and a full-service kitchen, a banquet kitchen, and a 3-meal-a-day restaurant that has the ability to influence an association or convention planner to say, well, you've got a beautiful convention center. Now, can my people stay at a hotel that's adjacent to it, it's a quality hotel? So we just immediately have to tell the city, you're going to have to write a big check too. They don't want to hear about writing a check for a hotel. And they say, well, we're not in the hotel business. Well, wait a second. You're in the meeting business, right? Well, yeah. Well, if you're in the meeting business, you are in the hotel business for this one big meeting hall, this convention center. You've got to have a hotel that's going to block rooms to help you recruit all these high impact businesses, 2, 3, 4-day businesses that will be spending $200 a night or $250 a night on a hotel room, buying big meals. So we're hardly ever, let me just say, we're hardly ever the first company that's selected in these solicitations because we're letting everybody know that if this is a $100 million deal, that city, you're going to have to put up 30, 40, maybe 50 million in order to get it done. So we have to create these public-private partnerships. And then our pitch is really, it should be a tax-exempt hotel as well. Only a handful of tax-exempt hotels in the United States. They're all supporting either a convention center or a stadium, an arena, an airport, or a college or a healthcare campus. And so when you make that connection and you get the bond counsels to give a legal opinion that this main purpose is a public purpose, then you can use a not-for-profit, a 501c3, a local government corporation that's set up by the city or the airport or whatever it is to own that hotel with a mortgage on it. And if it's a $100 million hotel, we'll keep 40 or 50 or 60 million off their balance sheet by having the not-for-profit borrow bonds, hotel revenue bonds that are amortized by the hotel itself. And the city has to make their contribution because it doesn't pencil unless they do. Any private investor that wants to own a hotel in a first-tier market's going to want an 18 or 20% internal rate of return on his equity.
Yeah.
It's highly risky, a construction project and business. And COVID proved that. Before that, 9/11 proved it, right? So the yield requirement for a private investor on a hotel is a steep yield requirement. And if it's a secondary city, if it's not New York or Chicago or Dallas or Denver or whatever, if it's Abilene, Texas, or if it's Jefferson City, Missouri, or they have their own need for this sort of facility, smaller, but still a need, right? And they have a market, a hotel market in that city that you can predict, not just us, but a third-party consultant could come in and tell them what the average daily rate and occupancy rate is going to be. And we use that with an underwriter and figure out how much that hotel, when it opens 3 years from now, will be able to produce in net income. How much income, how much expenses, food and beverage purchase, food and beverage revenues. We come up with the net operating income, and that's how much bonds it can amortize. And if we have a $100 million building and our projected net income from that hotel is only going to finance $50 million, we need the city
Pony up the rest
to put up the rest. And we show them how that works. And it's not an easy sale. It's not an easy task, but it is reality. And we developed a hotel here in Texas for an important city, and we were the fifth developer in 16 years of their trying and failing. There were four other developers that got selected and worked their buns off to try to build this hotel for their convention center and never could. And finally, 8 years after this, they opened their convention center with no hotel. And it was making $20, $30 a day for people that would come in for a flower show. They said, we got to have a hotel. And so we said, we'll respond if you understand that if we're going to spend $120 million here, you're going to have to put up 35 or 40. And if you write the solicitation saying that you understand that and you're willing to do it, then we'll respond, right? So that is basically the story that we have to tell. And it's hardly ever received with open arms the first time they hear it. And so we're likely to be competing 2 or 3 years later or 6 or 7 years later.
Yeah, it always kind of requires you to be sometimes the, third, fourth, fifth bite out of the apple in order for it to actually get some legs and get moving. What would you say has been your, favorite project, most successful, or maybe just one that you're most proud of and why?
Well, that's such a hard question to answer. I take such pride in everything we did. The first performing arts center that we did was for Durham, North Carolina. It's called the DPAC, Durham Performing Arts Center. And it is a wonderful public-private partnership. It is constantly, for the dozen years that it's been open, has ranked in the top 4 venues of its size in the United States in terms of ticket sales and success. That success led us to Salt Lake City, Utah, where the mayor of Durham, after his deal's opening, is now well known, is at a mayor's conference telling the mayor of Salt Lake, who wants a performing arts center in his city, well, Garfield did a nice job for us. You ought to talk to them. And so that led us to doing the Eccles Theater in Salt Lake City. On the heels of that, the city of Lubbock, Texas, engaged us, and we developed a $160 million performing arts center called the Buddy Holly. And it's such a highly acoustic facility. It's gorgeous. It serves the ballet, the opera, the symphony, Texas Tech University, and it's in partnership with the Lubbock Independent School District. We built a separate 400-room entertainment box so the high school could be the schools there, high school, junior high, could be very active in the performing arts. So, even though we're just as well known for doing these hotels, I just love the flow of that, one successful project leading to another, leading to another.
That's amazing. Now, knowing that you've worked in hospitality, education, healthcare, I mean, you name it, I'm sure you've developed it and touched it. Which sector do you think is ripe for innovation and investment right now that maybe isn't getting a ton of attention or that maybe you're giving more attention to right now?
You know, I wish that we were doing more of what we did early on. Atlanta's municipal courthouse, bundle of 8 elementary schools for Los Angeles Unified School District. Reno, Nevada's public safety training campus for their police and sheriff and fire. Those things are harder to do. They're less frequently coming in over our transom to be able to tackle. But um, but it'd be fun to do more of those. And I'll tell you why it's more fun, because it's the challenge of designing and building them is the same. The challenge of financing them is much easier doing those deals than financing a hotel or financing a performing arts center, where you're having to go out and get naming rights and pouring rights, getting Pepsi against Coke, or Coors versus Budweiser to pay for the right to be the exclusive vendor for those sorts of things
Yeah.
within a within a space. So it's a longer process with these buildings that aren't fully occupied by a public agency, whether it's a city or county, what have you, right? So I think those are fun. I'll tell you, we did start 2 years ago a company we call Garfield Clean Energy. And so um, we built it off of our public-private model. There's a city that we built a convention center headquarters hotel for, and very successfully. Um, and we became very friendly with the city manager. And over dinner one night in this city, the city manager is lamenting the fact that the city owns a couple of thousand acres north of their city that's being farmed, and the agricultural revenue isn't much. And boy, would he like to get more revenue off that property. And so he said he'd been trying to deal with a energy company to see if they could do some solar or wind.
Mm-hmm.
And long story short is we negotiated a 50-year ground lease with them on this property, with the understanding that we'd have a 4 to 5 year period to get it approved for solar, and that their royalty revenues would be multiples of what their agricultural revenue was going to be. And so our opportunity to learn about clean energy, solar, wind, and so forth, it's been a learning curve again for us. And so, and it's unique because
Yeah.
for a city to have 2,000 acres, I mean, to get that, you'd have to go out normally and negotiate with 20 farmers to put something of that size together.
Mm-hmm.
And so we were able to do it in one fell swoop. So we think that there's some good potential in, again, the public-private sector to provide leadership for these communities
Yeah.
that have assets of that nature as well.
That's beautiful. Now, rates obviously, create a challenge in the real estate and development landscape, right? I mean, with rates doubling, construction costs, being very volatile. How do you structure deals? And whether, I mean, you've been through multiple market cycles, right? So how do you look at structuring deals and still make them pencil? How do you mitigate risk? What's kind of the lens in which you like to engineer and put all the puzzle pieces together that you think lead to, successful project?
Well, that's a really great and timely question. Um, we opened 3 convention hotels within the last 2 years. They all started in 2021. Well, they all broke ground in 2021. Let me tell you, they started around 2016 or 17 because
Okay.
these take years to do.
Yeah.
But we sold the bonds in the fall of 2021, arguably the lowest interest rate environment in anyone's memory in the
Yeah.
U.S.
Right.
So we're doing tax-exempt bonds for all 3 of these hotels. And our average borrowing cost back in the end of 2021 for these hotels are around 4.5% interest rate. Now, can you imagine if this were a privately owned hotel, you'd be borrowing money from a bank today for probably 8 to 10%,
Yep.
only 50% of the cost. And then the equity investor would be coming in wanting a 25% internal rate of return for his 15 or 20% that he's going to put in, because he's the last guy that's going to get paid if things go wrong.
Yep.
And then the mezzanine investor is pricing his money in the mid-teens. So when you average a typical privately owned hotel out, they're paying double-digit interest rates on their mortgage. And we're borrowing money at 4.5%. So, I mean, the same hotel, the same brand, the same construction quality and everything else, we're able to make work so much easier and more efficiently. If we can do that now, that's 2021, just coming out of COVID inflation, supply chain issues.
Yeah.
We've gone from a market in 2021 where we could pencil a hotel at 320,000 a key. I'm not talking about a 5-star luxury hotel. I'm
Sure.
talking about a utilitarian 3.5, 4-star hotel,
Yep.
a Hilton, a Marriott, a Westin, et cetera. And today that's grown in just 4 short years to $500,000 to $600,000 per key or per room. Okay. Not only that, the Fed's rates are now where they are.
Mm-hmm.
We know they're going to come down, but we don't know when. And so, but we're a couple of points higher. It's not going to be a borrowing at averaging 4.5%. It's going to be a borrowing that may average 6%.
Yeah.
So when we talk to a city about the gap difference in the pricing, this $100 million hotel 4 years ago, they'd need to put in around 35%, maybe 40, maybe 30, but in that range. Today, they're looking at putting in at least 50%. And it's a more expensive hotel, right?
Yep.
So we're faced with those challenges, as every developer is, trying to be as innovative, as creative as possible. So know that when we're looking at these communities that are talking about a really needed piece of infrastructure, that you got to assess how badly needed it is, because they're going to have to make some hard decisions.
Right.
Do they just wait, postpone? Well, listen, if you think that Fed's going to lower the interest rates in the next year or 2 years, it's not too early to start, because it's going to take us about a year to design to a point before we even go out in the bond market.
Mm-hmm.
So, to start that process, to start the designs and the pricing and all of that, all the legal documents that have to be negotiated, a master development agreement, a design build agreement, a design agreement, engineering agreement, subcontractors, and the bond documents, the selecting the underwriter. And it's a process that not only takes 8-10 months to design, but in another couple of months to price. But during that entire time, you're just so focused on all those legal documents and all the city council meetings and approvals. It's not a quick process. It's just not. So you got to have staying power, and maybe not just staying power. I think you need to have the temperament to be able to take the blows and know when you start to go into a situation, there's going to be more blows, and you're just going to continue to experience what you experienced for 28 years.
Yeah, and maybe expand on that just real quickly, because I think that's, the entrepreneurial journey is a path of pain, right? You got to have almost this mindset that there's a little kind of got to become a glutton for punishment in some ways, right? Where you can take those blows and, like you said, have the staying power, have the stamina, and just to kind of, my first hotel, which I really learned more in my second, my third hotel, was there's going to be a fire and a problem every single day. And if I just get way too high or way too low, like, I'm going to lose my mind in this process. So if I really plan on being on this path for, my career and journey, like, you got to, like you said, have that temperament. What do you share to your team? What do you share to other, people that look to mentorship for you that are, trying to kind of build those calluses, right? And to have the right mindset to have a successful career if you're going to get into development or in this, kind of line of work.
Well, um, first of all, the great majority of what we do is tax exempt. I said that before. There are really two models in the hotel business. There's a privately owned public-private model where we act like you and that every other private developer. We come with other people's money and our own, and go to a bank and borrow some money and put it all together. And so we have to know that our other capital is from a extraordinarily knowledgeable and patient source. So when we built the Overton Hotel for the city of Lubbock and Texas Tech University, we work with the first billion-dollar foundation in the state of Texas. They wanted to provide support for the university, and they had a huge insurance company and a banking institution that they owned. And so we went in with one of the most sophisticated partners that we could possibly go in with. That's important. But we shield ourselves by the fact that the teams that we put together, remember I said nobody knew who Garfield was, but they all knew who Turner was.
Mm-hmm.
We deal with Engineering News Record. ENR publishes their list of the top 400 contractors in the United States. We're typically using one of the top 40.
Okay.
And their bond capacity, their ability to guarantee these jobs, the schedules, the deliveries, the pricing. When we have to go to Standard & Poor's or Moody's to get a bond rated, they're going to interview our contractor as much as they're going to look at the market study from the hotel specialist to see if it's going to perform, right? So our contractor takes on that responsibility. We don't. We get a development fee and other fees for our leadership and coordination. We take the responsibility for hiring the furniture, fixtures, and equipment providers, right? For the guys that do the OS&E and IT, the operating supplies, equipment, and internet technology, et cetera. We're going to, kind of like a law firm, we're going to get paid while the job is active. And when the job is handed over, our revenues cease. But we've never stuck our neck out where we were going to risk millions or sometimes tens of millions in these projects. I mean, we do $100 and $200 million construction jobs everywhere we go. So we've got to, to check our risk profile and manage it and maintain it. So we hire also the best architects in the country. So we're working with SOM, with Gensler, DLR. You understand those sorts of companies. We're working with Turner. We're working with DPR. We're working with Swinerton with again top-rated contractors and architects that protect us and protect the job,
right?
Because they have decades of successful experience, tremendous bonding capacity, which they bring to the table for us, so that the rating agencies of these bonds are certain that these properties are actually going to open, and not shut down before they ever open. And then we're working with Marriott, and we're working with Hyatt, and we're working with Hilton, the top brands in the world that come in and sign 30-year management agreements on these hotels and run everything 24 hours a day, 7 days a week. Or we're dealing with ASM or OVG, the largest operators of convention centers and performing arts centers. So the promoters and operators of those venues are top flight as well. So we don't just deliver a building and say, bye-bye. We say, we're delivering this building, and by the way, here's your partner for the next 30 years. And they're totally comfortable with the names and the brands.
Yeah.
When you look at the guest satisfaction memberships of Marriott and Hilton, or even Hyatt, people want to come there and earn their points for staying at the hotel so that later on they can take their families for free on another vacation using those points. So I guess the methodology that we try to bring in, such recognizable talent surrounding us, has given us the ability to perform. And without ever elevating our name to the levels of those organizations.
Well, from what I'm hearing, right? I mean, the way you're mitigating your risk, you're, protecting downside, capturing upside, and really kind of creating that swan effect, right? I call it the sleep well at night effect of is you're aligning with the best, right? And you're putting the right people or the right, companies in the right seats. And when you can do that, you're really building a moat around your project, your brand, your reputation, opening new doors and opportunities as you do that. So it seems like that's something that you guys have done really well. I want to make sure that, I don't miss the opportunity to ask you on. I'm assuming you're a data guy. You love, tracking what is going on in the markets and, kind of keeping a pulse and somewhat of a crystal ball on kind of where things are headed, even though I know there's, of course, a lot of stuff that we can't control. What are your thoughts on the market right now with headwinds, tailwinds? Are you bullish on what's ahead? Are you bearish? What's your overall perspective on, kind of how we're closing out the year and really what, maybe the rest of this 3 years under this administration might look like?
You know, I, uh, I've been in this for so long. Um, let's just say that I'm not as bullish as I was a few years back before interest rates elevated, before unbelievable inflation grabbed a hold of us,
Mhm.
where we couldn't predict what a subcontractor was going to build a week out. When before we'd get a bid that would last for 3 months or 6 months, but everything changed. So in that sense, we've had to work harder and smarter everywhere we go in order to be able to satisfy the requirements of our municipal clients, of their financial advisors and bond counsel. So, we're working harder at it. Each market is separate. I mean, if we're asked to do a performing arts facility for one city and one state, or we're asked to do a convention center and a hotel in another city or another state, we want a third party to make the assessment of that market. We don't want them to hear from, quote, the developer. And historically, always looked a bit askance at to say, well, you're in it for the money. You'll tell us anything to get the job. We want them to hire a third party organization to assess the marketplace and predict as best they can the future success of whatever this development is going to be. And if it's a successful market study and recommends that, yeah, this would bring X amount of economic growth to the community, will perform so well, then we're going to do our very best to build around that, to put the right architect on the assignment, to put the right contractor, and uh, and to structure the right capital program for that particular community. So, yeah, I mean, the pipeline is busy. We're competing in a number of markets. We've been selected by several markets already. Um, that now we're working very hard on the designs um, and the capital solutions that'll follow getting the guaranteed maximum price bid from our contractor. So um, we kind of know the markets to focus on. Probably 80% of our business is referred business to us. So we're going to get a call from a contractor, from an architect, from a hotel brand, from a brand that manages a performing arts center, saying this city needs this, and we'd like to brand it and operate it, but will you come in here and try to put the development team together and the capital together? And so we examine these things very thoroughly before we ever take any step to try to compete.
Mm.
But when we go after it, we're comfortable that the potential is there, right?
So you still feel confident in your ability to execute on the business model in light of what you see, at least out in front of us and maybe around the corner a little bit. You guys still feel very optimistic that you'll have the ability to weather storms, adapt, pivot on, on the fly as things are coming at you, and do what great entrepreneurs do, right? Which is navigate challenging times and still find a way to be successful.
Yeah. Simple answer is yeah, we do.
I love
Right.
that. Now, for those that want to learn a little bit more about you, your company, where's the best place for them to do that, right?
Well, our website is www.garfieldpublicprivate.com, garfieldpublicprivate.com. So we're there, and people can contact us through that website. Our phone numbers are on there, and a bit of our history and things that we've done and what we do well. So we're always eager to for people to know us and to be able to contact us. And so really appreciate being asked the question.
We will be sure to link all of that up on your show on the website. Feel free to check out all of those links and reach out to Ray and his amazing company if you guys have additional questions or inquiries. That being said, Ray, it's been a pleasure. I feel like I could sit here and ask you hours and hours and hours of questions. I know for the sake of time, I want to be respectful of getting everybody back to turning an ROI on what the energy and effort needs to get allocated towards. One final question for you, for those that want to, think of the early Ray, the developer that had aspirations and dreams of doing big things. What do you say to that person that's trying to break into the space and get into the arena of investment and development?
Well, just to aspire to everything that you know you can accomplish, to reach higher, um, to to assess regularly how you're doing, how you're feeling, if you're comfortable in where you are. Um, I came into the business and my uncle told me, Ray, if you want to make money fast, become a residential broker. If it's going to be a longer slog, if you're going to do commercial or investment properties. And I said, I don't care. I'm going to do commercial investment properties. It's more challenging, it seems to me, intellectually.
Yeah.
Um, and then again, be aware of the doors that are going to open for you and assess the added benefit and education that you're going to grab from those things. Reach for the stars. Know that, in my experience, I wouldn't be here if I hadn't been open to change. So I know that if you look at my resume, I've got 4 years here, 8 years there, 4 years there, et cetera, and not a solid 50 years at one place.
Yeah.
But it's been a fun ride, and I do enjoy all the people that I work with that are in our organization, and the exposure to all these great design firms and construction firms and investment bankers and so forth. It's a vibrant industry, and I couldn't recommend it more highly.
Yeah, literally building cities, states, our country in so many cool, nuanced ways that most people just don't think about. And the impact that obviously you've had on, so many communities is amazing. It's inspiring. Ray Garfield, thanks for coming on the show.
Thank you very much, Matt.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionaireMindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media, at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.